in a situation where your hands are kind of tied, you kind of just bite the bullet and go with it. So we're in East Garfield Park, Chicago. We're maybe 7 miles from downtown, not extremely far.
This neighborhood is known as Andersonville. We're on the north side of Chicago, close to the lake, or maybe only about a half a mile west of the lake. The main thoroughfare, Clark, has tiny shops and restaurants and all of that.
We have speeding cameras, we have red light cameras throughout our community, which is a poor community anyway.
The insurance industry has spent years actually fighting not to release the data that we use in this analysis, which is data about risk and claims payouts per zip code. What we noticed was also the way that the companies set rates it's a black box. You can't see inside of it. They just assign each zip code a certain factor. And how did they come up with that is hard to know. And what we found is in many cases, it just didn't appear to correlate with the true risk in those neighborhoods.
The neighborhoods are the cut-through places for commuters coming home. Parts of it are very busy. You know, the bulk of it, the most residential, empties out during the day. People drive to work. And yes, people do have their cars broken into. You know, I've had my tires stolen here.
I figure it's no more traffic here than maybe anywhere else, because everywhere you go, you got people working and you got schools. So I feel like it's pretty much the same, maybe even less, because even though you need a car, not everybody can afford one. So in a poor neighborhood, it's probably even fewer people with cars. And I mean, if I'm a thief or I'm a crook, I'm not gonna rob somebody poor, I'm not gonna get much. If I go to their neighborhood, I can get a whole lot more.
So East Garfield Park is an example of a situation where it definitely feels risky to be there. There are gunshots during the day, but in terms of insurers' risk, in terms of what they have to pay out in claims, whether it's because no one can afford a car or because people aren't having accidents because they're not afraid to drive there, I'm not sure. But regardless, there's not a lot of payouts going on in that neighborhood. And so it kind of plays with your idea of risk.
It's almost like, do you eat or do you pay insurance at times? If you think about it, that's 2 weeks worth of groceries for me and my family. I mean, it's extreme, especially when you consider to be a good driver, you know what I mean? So if you're gonna make me pay so much and I'm a good driver, I could only imagine what you're making a bad driver pay.
Part of you, it doesn't surprise, because you know that unfortunately that's the way so much of the world works.
It's hard to be a good consumer in a situation where the other side has all the information and you don't. But I think there's also a question about demanding more from the regulators. This data is available to them. We had to file public records request to get it. They could also be doing this type of analysis, and it seems to me that more investigation is warranted into whether these disparities that we saw are really truly warranted by the risk.
I don't think that a lot of people who make the rules really know what it is to kind of be at the bottom in a sense. I would just say, make it fair. If I'm a good driver, if I'm a safe driver, I've been loyal, I've been paying my bills on time, I think that it's time to give back.